Okay, hello everyone. So the best way to learn is on the job, and while we're on the job, it's worthwhile reviewing what happened so we can learn from it, and why we can once again confirm like timing and technical analysis together is really the best way to trade. Now, as you know, all week I've been posting and I've been talking about the euro dollar. The reason I've been talking about the euro dollar, as you guys know, if you're following the videos, for months I've been saying euro dollar needs to come back here. Okay, if you follow the videos on YouTube or in the members area, you guys know that for months, like for a few months already, we're waiting. And I said, when we get here, we've got to go long. All right, we've got to start looking for buys. Question, but when to buy? And that's when the swing days come into effect. So once we're in the zone of buying, once we're in that 37.5 zone, because if you take a look at here, this 37.5 is 1.0188. Come to the daily, so 1.0188 is about there, right? There you go, 1.0188. So here we are. All right, this is it. So this is the zone. So when to get in? Remember, when we're down there, the bias is to the upside. We want to go long, all right? Because we've come down to our golden ratio. And for me, as you know, if you've taken the coaching, it's 37.5. When that thing happens, 37.5, we are in the game on a swing day. So once the market gets here, look, swing day up, swing day up, swing day up. We just want to go up. Now the market breaks out, and what did we do? According to the things we've learned in the coaching, right? Diagonal first wave, 5 moves. 1, 2, 3, 4, 5. So what can we expect? 3 leg down or just a leg down? Where does that come down to again? Where the market fills in the gap, nice and easy. When is your swing day? The next day. Good move up. Market comes down. Remember, we want to go long. Okay, so in the beginning of the week, Monday, we're like going long, want to go long. Tuesday, want to go long. We want to go up into the targets. Also, what did help us was a PST breakout, as you know. Let's just go to the weekly as well. And in the weekly, see how the market dipped in, went up nicely, comes back right back into that zone. And this is exactly where we need to get in. Last week as well, plus this week to push up. So on the daily, understanding Monday as a swing day, we just want to be going up. Once that understanding happens, then on a Monday, let's get into Monday here. Let's just close that for a second. Open up the 15-minute chart. So this is Monday. Now you can see here, nice and easy. Okay, the market makes a low. Okay, that's your Monday opening. And the market is going up and, well, pretty much sideways here. Remember, we decided to go long on this one. We made a little bit of money, covered the trade, entered again, got stopped out. So Monday was a bit of a messy day. So we had good trades, we had bad trades, but it was like, canceled each other out kind of thing. But on Tuesday, something really nice happened because it came into the manipulation zone. So once we're in there, once the market is in there, that's great. The next thing you do, your technical analysis. Remember, technical analysis. All you got to do is let it break out. Once the market is in there, broken out, you could have gotten in here as well, okay? Plus, you could have gotten in there. Where did I get in? I got in here. I got in, I think, in a few places. Plus, I got in here, okay? Because I took profit when the market came up here. And I also posted in the members area. Remember? I posted in the members area saying, guys, let's do it. Okay, so this is the members area. Where was that euro dollar transaction where I said on Tuesday? Here it is. Okay, so on Tuesday, let's get rid of these here. On Tuesday, This was the zone. Remember, I said, guys, we need to get in here. These are trading hours. We're either going to break out, pull back, or we're going to pull back and get in, right? And look what the market did at the trading hours. Let's take a look. Let's go back here into Monday and look at that. During the trading hours, the market went up. The market came down into here again. Okay, and these were trading hours, and this is actually, and I actually posted it as well, getting in there. So the market then just broke out. And if you take a look, let's take a look at the other post, because I had another post there as well. Okay, so let's put that aside. Here is the other post. Now look, this is the trading hour. See how the market pulls back into the trading hour, and I am already in the game here. Okay, so it goes up, pulls back, that's it, I'm in. And once I did that, I just posted it to you. You can see I've got 3 trades on here. Tight stop loss, okay? And I'm targeting what we should be targeting on the daily, right? Because the daily should be our first target. We should cover the trade. And what was that on the daily? 1.0370. Right, that was our target. Remember, 1.0370. And what did I said? What did I say on that day? I said, guys, I'm going to put the take profit at 1.0366, slightly under it, just in case it doesn't quite make it. PST is very accurate. It is deadly accurate, and more often than not, and much more often than not, you will get hit when you mark your take profits. Okay, so once the market hit us, these trades were covered already. Profits, honky-dory, everything is good. Plus, giving us a new opportunity to get back in the next day. Now, look, the next day, why is it important? Because the next day, Powell was talking, but we're using time and price. We don't care who's talking. It's none of our business, because if we've measured the time correctly, who cares? And look what's happening here. Now this is yesterday. Now remember, yesterday I had positions. Okay, this is on Wednesday, right? So on Wednesday, remember, I had long positions, and I said to you guys, if this goes pear-shaped, we're going to have to get out. Okay, which we did, right? Small loss, but the bias is to the upside. Now look what the market did. This is a 15-minute chart. They smashed it down, and now everybody's scared shitless. So what's everyone thinking? Oh, I'm not getting in, because they just smashed the market. Now nobody knows what's going to happen, but you know. Why do you know? Because we knew that this was a strong trading hour yesterday. Remember the hours for yesterday? And our bias is to the upside. If the euro comes down, we want to buy. So the market did us a huge favor yesterday. They smashed it down, brought it to the weekly pivot, plus they did it on a trading hour, which is exactly what we're anticipating. Great news for the US. Great news for the US dollar, but our bias is to the upside, and one news and one testimony by Powell isn't going to change the laws of nature. So, market goes up, starts picking up immediately. So down here, we're back in action. And I posted those trades as well in the members area. Okay, remember, as they were done, let's take a look here. Right, I think this is it. Look, see how I'm immediately in the game, and I've got like 3 or 4 positions open here. No, not this one. This is gold. Sorry. Let's get out of this one, not this one. Okay, gold was also good. No, just bear with me for a second. Okay, Okay, so this was gold, right? Remember, so I understand that. I said if anybody bought gold, be careful on this one. This was nice and easy as well. As you can see, gold 2 right on the hour. Look at that. Right here on the hour. Going up nicely into where it should be going into. So everything is just, exactly according to the time. Look at the fall. I did say gold will fall. I gave price targets. It did not make the price targets. If you were just betting on price targets, you would have just gotten stopped out, or you would have not made money on that trade. But knowing the hour here, once you understand that this is your trade hour, this is where the market can turn. Look what happens. The market just goes up. And gold, what have I been saying all week? Gold is going up, but it should retrace. If it does, we need to follow through. So if you're trading gold, all you had to do was follow through, and then the market should be going further up again because the trend is up. Gold is up. So why stand against it? Once the market retraced, if the bias is to the upside, go long. Let's take a look at that euro dollar trade I was talking about. Here it is. Okay, and I posted this again. I said, guys, I am in. You see, I've got 4 positions here. 2 at the same price, 2 just up here. Why? Because it came down into this weekly pivot zone as a get in and go with it, because our bias is to the upside. Also, look at what we learned in technical analysis. This is the push up. Look where the market is going. It is going from one trading hour to the next one. Coming down and then boosting up again. And if you have a measured move, you should have been in there. You should have actually, like taken profit, because once the positions are covered, okay, that's it. You're just like letting it go, or you're moving your stop losses up. So take the stop from here, put it up there. Why? Because if you have a target, and if that target on your daily chart is looking to go to here, then why would you get out? Just move your stop forward, cover the trade, take partial profit or close 1 or 2 of the positions if you've got more, then just let the rest ride. Why? By doing so, first of all, your trades are covered. Second of all, the small losses we took are now 5, 6, 7-fold are being taken over with winners. And then look what happened. The market came into the PST target hours right here, which is what I mentioned this morning. And remember what I said this morning? I said, guys, I'm taking these out once we get to the trading hours. Well, look, your trading hours. And remember what I had? 1.0433, not this one. Let's go back. Okay, 1.0433. I think I must have mentioned it. There you go. Okay, why? Because that's your 1.043, 1.0430 up here. Look, the red line. Okay, this here. So that being a target, why is it a target? Because it's on the daily PST. And if it's on the daily PST, you got a target up there. Why would you want to get out early? Especially if the trades are covered, you moved your stop forward. All you have to do is take your cup of coffee, sit back and let it play out. And that's all you have to do. All right, and then the market gets there. So all week we've been following it because we've been tracing the euro dollar for ages. It's not just something we did for today or this week. We've been looking at it for like weeks and months, like 3-4 months. saying it's going to get there. You can sell to that level. When it gets to that level, you can buy that level. And this is exactly how things panned out. So yesterday, also again, trading hours, market buys, comes back down. I entered here as well, and I shared that as well. Again, in the members area. The minute I entered that trade, it should be on there. I'm pretty sure I've shared that one as well. This one here, this is the one again. Look, see, I've entered that trade here as well. Why? Market makes an impulse move, pulls back. If you measured this move from here to here, this impulse, you're going to get to your 37.5. Let me show you. This was the move. All right, so this is the move, impulse. That's your impulse from here. 50% on the long one. Where's the manipulation bar? The manipulation bar is this one. Okay, that's the manipulation. If you measure it from the manipulation, it's down into 25, 37.5. It's a trading hour. Let's make this a little bigger so you can see. I hope you can see it. All right. So all you have to do is then measure the move. Once you measure the move, okay, then that's it. It's going to go into where it needs to go to. I had 2 trades in, one covered, the other one I got out once the market moved all the way back up again yesterday evening. Okay, why? Because this was entered later on, but I took 2 profits on that trade. Okay, 1 to 1 to 1 to 3 or 1 to 3 or 4, because the stop loss was really tight, and you can see it as well in the, can you see it here? Maybe you can't because of the, no, you can't see it here, but the stop loss was just under the low here. Okay, maybe I was doing this and posting it, so I put it in later on. Okay, but it would not have been far away, because if the timing is right, that's where we're going to turn, and if we're wrong, we don't want to be there. That is why using a 1 bar stop loss just makes sense, because if your timing is correct, you are not gonna, sit and pray that it's gonna go in your direction if things are going haywire. Let's get rid of that. Okay, so once the market pulls back, trading hour, that's it. Your stop loss just needs to be under there. Same thing, everything. Okay, also this morning in the Asia session. All right, where are we on the Asia session? Let's take a look. Thursday. Okay, so Thursday the market came up into 850, and this is when I was doing the video and I said we're getting out. Okay, I'm getting out anyway. Why? Because it did that 30 level which I had posted about, and that is right there. So once you're in that trading hour, that's it. The market did the PST levels. Why would you be getting in when the market is now at the target zone, and now it's drifting down? That's it. Now today we've got news coming up, so now we've got hours. So if the market comes down again, market will probably buy. Why? Because the next swing day on the euro dollar is a Friday. Okay, so then we should either make a higher high, maybe slightly higher, maybe going to that 1.0460 I was talking about on the weekly, because if you take a look at the weekly PST 45, 1.0468. So maybe we'll hit that tomorrow and then call it a day, and the market will retrace a little bit. This is tightening up into a triangle, as you can see. So one way or another, this is going to blow out. Okay, so we're either going to come back down a little bit, muck around here. We can blow down or we can blow up because the market has made a down move, but it doesn't really matter. At the end of the day, we're looking to buy on a swing day. If we're at the lows, swing day, go long. If it's a swing day and it's at the highs you want to sell, you can do it with a smaller lot size. But by following the swing day and the hours, you are just so much safer. The same thing with gold, the same thing with the indices. If you take a look at the SP 500, all you have to do is just follow the hours. Okay, look at that. This was a trading hour yesterday. Market just plummets down and everybody's scared because of this big slap in the face. So nobody wants to buy, but this is not the right idea. Precisely if the market is bullish and it's a trading hour, you can. Now yesterday I said if the market is high, you can sell. From the highs, you can sell the indices. Okay, but as you can see, that was a high. The market sold off. Was it a trade hour? Well, the trade hour was, I think, somewhere around here. Let's take a look. Okay, let's not be lazy. Wednesday. So what do we have? 3:30, 12:50. So 12:50 is 11:50 on the platform, and that's 2:30. So 11:50. Let's do that. Vertical line properties, because the platform is 1 hour behind me. Okay, so we're going to do this. Oh, just a second. Let me do it like this. Okay, 11:50. I'm just going to move it here. 11:50. Look at 11:50. This is 11:50. Okay, this is where 11:50 is. Market going up nice and easy, nice and easy. Okay, and then that's 11:50, and then we've got what, 3:30, which is 2:30, and then 3:55. This is, let's do 3:55. That's your 3:55. And what do we say, 2:30? It's going to be 2:30. This is 2:30, exactly 2:30. Market smashes down into, there we go, 3:55 on the platform and 4:40. That's your 3:55. Where's your 4:40? $4.30 is on there. It's a 15-minute chart. That's your 4:40. So the market comes down right on 4:40, starts pushing all the way back up into what hour? Let's check it out. 7:45, which is 6:45, and 9:15 on the platform. So 6:45, 6:45. That's your 6:45 is there. So market goes all the way up into there. Okay, which is fine, because if you know technical analysis, you would have said, okay, we're bound to what? Close the gap. So what do? Close the trade, close the gap, let it go. See what I mean? And with SP 500, I said it's a bit tricky. Why? Because we're stuck in this mishmash zone, right? It's a tricky place to be. It's not a place where you want to be. Okay, but you know, selling the highs, did say, is an option. I said leave the indices alone if you can. Okay, which is why I focused on the euro dollar. Even gold was tricky. Gold is really volatile. It can just, like, you know, terrorize the market. But look, knowing the hours, look at that, going down, down, up. And we said we wanted to come down. It did, not to my targets on the PST. It was pretty close, okay, because remember we had that measured move. Let's do this. We had that measured move in there. It didn't quite make it, but you knew the time. If you know the time, say, wait a second, the market crashed down. This is a trade hour. It's probably going to take a swing. If you shorted it, you would have taken some profit, moved stop forward, or said, you know what, gold's bullish. Let's close all the sells and push up. So if you bring time and price together, your account is going to take small losses, very small losses if you get stopped out. But when you take profits, it's just colossal. And you're also following PST pricing. You've got targets. And when they're clear targets, you enter in those clear targets, then, that's it. You just follow it through. And over just a few days of trading, which I posted today, as you can see here on, it's just huge. Look at that. Since the beginning of the month. And I started doing this specifically for the challenge on a small account. Why? Because small account risk management is hard. You cannot afford to make mistakes if your account is small. And a lot of people have small accounts. Because a lot of people write to me and say, listen, I don't have a lot of money to trade. What do I do? Can I use this with a small account? Yeah, you can. Because your risk return is very high. Your stop losses are tight. And your predictability in winning is much higher than just looking at the screen and counting on the price, because you trade when price and time equal out. And if you're wrong, it's a small stop loss. This is why this is huge, if you think about it. And I'm also specifically doing this over the challenge period, because we're going to move into a fintech phase, hopefully. And in that fintech phase, I want to make sure I've got manual trading, not algorithms trading, not AI trading, just manual. A person who knows time and price, can he do it? And this is the surest way. Obviously, everything in life takes a time to get used to and to be good at. You're not born good with anything. It takes time to develop and practice. That's true. But at the end of the day, if you look, we got a 64.57% success rate. It is not 80s, 70s. It's not great. But look where the market, where the price came from. This started with 1. Now we're up to 7. What does that tell you? Since the 6th of January, okay? I started trading on the 7th of January, started the challenge on the 6th of January after I got back from the New Year's. And today is the 13th. So over a period of 5 weeks, okay, we've doubled and doubled. You see what I'm talking about? And that is with dents, without dents, but with scratches in the account. And this is how you want to keep it. So managing a small account is doable if you've got price and time on your side. Does it take a bit of practice? Everything does takes a bit of practice. But once you're used to it and you're tracking yourself, then it just becomes priceless, because during the day what time you're going to trade. Who knows that? Everybody's stuck in front of the screen looking at the price. Who can stay in front of a screen for 24 hours? You can't. So you're going to have to pick a session. Or you're going to say, well, why don't I just pick an hour? Even in a session, it's an 8-hour session. What are you going to do for 8 hours? Look at the screen. What kind of a life wastage is that? All right, so I hope that makes sense anyway. But this is how it is. Also, guys, I seriously recommend, I've posted some nice articles on the blog site in the website. These are really good stuff. I think you should read, okay? Because I often meet people and they want to trade, and that's fine, okay? What I see with many people is they don't really know. They're not 100% yeah, I want to be a trader. And this is really important, okay? Because success really depends on your desire. Can anybody trade? Anybody with a will and a desire to succeed can trade. If you don't have that, you can't just say, I'm going to be a trader. It's just not going to work out. So sometimes I write articles which are like, like to the point, because it's a career, it's a process. It's something you've got to take ownership of, something that's going to make you accountable. I also started the challenge because I felt, people want to learn how to trade. And once they get into it, they understand it's not easy. Of course it's not easy. Nothing's easy. But it's a process where you can kind of like be accountable to yourself, not to me or anybody else, because this is your journey. But you gotta just clarify for yourself, is this what I want? And if it is, you've got to just shut down and focus on this. You just have to get rid of everything else that's around you, that's distracting you, including all these YouTube videos. I don't make a lot of videos. I'm very focused. And I think this is how it should be. A person, if they're going to do something, they should learn how to evaluate the market, understand how they are evaluating it, not how others are looking at it, because everybody has a chance of getting it right. And just because somebody got it right once, twice, doesn't mean they're getting it right all the time. It's impossible. But the important thing here is you are developing your own understanding. Then you've got your own plan and you can focus. You just need to shut down all these distractions in the social media on what everybody else is saying, and understand that I don't care if Trump is talking. I don't care if Powell is talking. I don't care what news there is. I don't care. We've got the swing day calculated. We've got swing hours calculated. We've got technical analysis pricing done. That's it. Same thing with, look, remember when on the weekend Trump talked about tariffs? That was on the weekend. We had swing days. I said for SP 500, this is last week, remember? I said, guys, that's going to be a swing day. That's your Friday. Okay, so the market went up, market sold, and on Monday it opened all the way down here. Okay, on the weekend. I didn't know Trump was going to talk about the tariffs on the weekend. How could I know that? But understanding Friday was a swing day. So if you shorted the high, great. If you kept it open, you would have opened your eyes with a beautiful surprise in Asia. Okay, and that's it. So knowing them in advance is great. And you have to understand, okay, it's not 100% all the time, but look, it is pretty damn good. Okay, and especially if you selling the highs, buying the lows, if you designated places, and if you're not mucking around in between levels, this is pretty damn good. Okay, yeah, we had, look here, we've got these crosses, right? So yeah, we had these bad days, but out of all of these, you got a few bad ones. And if you trade according to the technical analysis methodologies that I'm teaching, the 5 methods that we use, you match it to your swing day, swing hours. That's it. Minimal risk with maximum expectation. And it's not going to get any better. Bloody hell, it's been half an hour. All right. Have a good one.